Hello, everybody, and thank you for joining me today. It's Alan Barry Labucan with the Rocks and Stocks News Show, and this is my weekend show I'm doing on Saturday, the 25th of October. And we'll start out with gold from the chart at FinViz. As you can see, it's had a great run since this basing period here, which was preceded by a basing period here, a basing period here, and one that you can't see off the screen. Each time it rallies quite significantly off of that. Of particular note was this movement since the latter part of August when the Federal Reserve had their Jackson Hole, Wyoming meeting and telegraphed that they were going to cut interest rates. And since then, both gold and silver had a very big run. And I think what they're sniffing out is that stagflation is going to kick in. And then this last week or so of action, we saw it hit all-time highs at about 4,400. Had a couple of down days during that. So there's been some volatility, which is pretty normal when you've gone from basically $1,000 an ounce up in a very short period of time. But whenever I see this kind of reaction in the market, I often will re-evaluate my indicators of what I think are driving this big move that we've seen from going back to early 2024, which is off the page over here, when gold was down around $2,000 an ounce, broke through 2,100, and then set a series of record highs. So, what caused those series of record highs, I believe, is primarily the death spiral of debt. And that hasn't changed one iota. In fact, if anything, it's getting worse. The debt just recently got above $38 trillion dollars. It had its fastest rise of $1 trillion dollars ever. It surpassed the $1 trillion rise that happened during the COVID. And so instead of it slowing down, it's increasing in pace. And that's happening without any COVID type scenario in the market. And I think that's got a lot to do with the fact that the government just keeps on spending like drunken sailors, and they're driving the debt up at the fastest rate to go up $1 trillion in history. And another issue that I see with that is or another key driver, or what I call the straw that breaks the debt camel's back, is the cost of servicing the debt. All right. So currently, let's say I'm arguing that I think the debt will get to 40 trillion by the end of 2025. And just for easy numbers, we'll use that price. And if you look at the current interest rate, that would mean that the cost of servicing the debt would be $1.6 trillion dollars. Now, some believe that the interest rates are going to go down to 3.5%. At 3.5%, you're still looking at for $1.4 billion dollars in debt. Now, I would not be surprised if the Federal Reserve is goes back into the quantitative easing and the free money era, but there are some limits to how much they can get towards that free money era. Now, free money in the sense that the interest rates are lower than the inflation, well, that I think is without a doubt. Will it go back towards zero? I think there are some limiting factors to that happening, and that is that when they cut interest rates like that, they the inflation would go off the charts. And so, they've got to keep that sort of juggling of those so-called dual mandate of the Federal Reserve, which is to keep employment in good order and also prices in good order. They've been sort of failing at both of those lately as the inflation is going up, is now, as the government reports it, is at 3%. I think that's a farce. I think that the real inflation in the economy is probably closer to double that. But even using their 3%, and that's 1% above their target rate. So they've completely failed in their effort to bring inflation down to the target rate. And now that they're cutting interest rates, it's about to send inflation, even the government inflation, our government numbers of on inflation higher. And why are they doing that? Well, the jobs market is in trouble. And if the jobs market is in trouble, that means the economy is in trouble. And I believe the Fed knows that, which is why in the last 3 or 4 meetings, or several meetings actually, when they do a consensus of their members, they ask them where they predict economic growth will be and where they predict inflation will be. And they're making the case that growth could drop down to about 1 to 1.25%, and inflation could go up to 3%. Well, they've already got the right part of the 3% because it's at that level right now. And so they're predicting stagflation. And so this issue of the cost of servicing the debt is just adding to the problem of the death spiral of debt. Uh, some people were shocked when the deficits got to 2 trillion. I think there's a very likelihood that in 2026 we could see well over 3 trillion and possibly 3.5 trillion or more. And the reason I say that is the government spending just keeps on going up, and it already had a $2 trillion deficit. And then if you add on the cost of servicing the debt, and let's say it's anywhere from 1.2 to 1.6 trillion, you're looking at well over three, possibly 3.5 or more $1 trillion. And that just keeps on piling on the death spiral of debt. So the main driver of this fantastic bull market that we've seen in gold, where it's set a series of record highs since breaking out in early 2024 above 2100, nothing has changed on that key driver. And the the straw that breaks the camel's back, which is the cost of servicing the debt, is only getting worse. And so these key drivers, nothing has changed over the last 10 days or so. It's only getting worse. Okay. So, though nothing wrong with those key drivers, another issue is that ultimately another key driver is that the worldwide debt and current fiat currency system is broken. The and so what keeps happening? The debt, just like in the United States and worldwide, keeps on growing in a death spiral of debt that no politicians want to cut spending. They just keep spending more and adding more on to the death spiral of debt. And when it comes to the fiat currencies, what do they keep on doing? They keep printing more and causing more inflation and devastating the purchasing power of the fiat currencies. So, what's the alternative? Well, gold. And if you had to own gold, instead of declining fiat currencies, you'd be doing a lot better this year, last year, and I think many years into the future. And so you've got the death spiral of debt, the unsustainable cost of servicing the debt, the broken fiat currency and debt system, and then you've got the central bankers of the world that are diversifying out of the US debt and currency, and they're loading up on gold. They currently own over 20% of their fiat foreign currency or currency reserves in gold. But that's still the price of gold, the value of gold still only represents less than 10% of the worldwide debt, which is well over around 320 trillion right now. And so I don't think that those are very balanced when you consider the amount of debt and the amount of reserves the central bankers have. So I think that I don't want to call it a phenomenon, but this trend of central bankers diversifying out of the US dollar and the US debt is going to continue well into the future because they got a lot further to go to get anywhere near where it was before the world went off the gold standard. Back then, 80% or more was held of foreign reserves was held in gold, and the debt situation was nowhere near where it is now. And so, and gold was also an important part of world trade. And if you're going to do world trade and you all you want to trade with is broken fiat currencies, well, I think gold is also going to revive its role as an important currency for international trade. We're seeing that happening now with the BRICS nations. The Chinese are putting together something similar to the SWIFT system, and they want to trade in fiat current, or they want to trade in their domestic currencies more instead of doing so much in US dollars. I don't think any of that's changing. In fact, I think it will ramp up. And the other key thing that I think is happening, and I think gold and silver, as well as the precious metal stocks, look at silver, right around the same time that gold broke out after the Federal Reserve put their cards on the table that they were going to start cutting interest rates, silver blasted off. Gold blasted off. The precious metals stocks blasted off. Well, when does that happen? The last time we saw something like that happen was in the 1970s when there was stagflation. So I believe that the gold market, the silver market, and the precious metal stocks are sniffing out stagflation and that it's going to get a lot worse. And I think it's already significantly bad. I think consumers feel it. I think they feel that inflation is much stronger than what the government statistics suggest, and that the jobs market and the economy are weaker than the government statistics suggest. So there's already a stagflation, but this ramp up in the price of gold and silver and the precious metal stocks are suggesting that we could see something like what happened in the 1970s. And post stagflation, then you got hyperinflation. And so, however these things all play out in the future, I believe that the best place for investors to protect their wealth and grow their wealth is in assets like gold and silver as well as the precious metals stocks. In fact, I would make the argument that the precious metals stocks are the best because although the price of gold and silver have broken out to new record highs, the stocks, the precious metal stocks, have not participated to the same degree. You can see that in the major mining companies. They're growing they're growing their free cash flow at like 10x, and yet their stocks have only gone up tripled. And so their free cash flow is growing a lot more rapidly than than their um, um, than their stock prices. And I see this phenomenon all the way along the food chain, whether it's the major precious metal miners that I follow, or the mid-tier gold miners, or the junior gold miners, or the developers, or the explorers. I see that they are all trading near all-time lows based on metrics that are important for each of those, such as for the explorers, what are they being valued for what they have in the ground? And they're at a close to a historical low. You look at the developers and considering what they have in the ground and how much the development industry needs to improve, they're not getting any kind of um, uh, um, premiums in their valuations. Same can be said for the junior miners and the mid tiers and the majors. And so I think that there's a lot of blue sky in the precious base metal stocks, and that's the best play when you're looking at the price of gold and silver for that matter. Okay, so I wanted to talk. Oh, before I get talking, there's some important events happening this week. One of those is that the Federal Reserve is having their meeting, and then they'll announce their interest rate policy on Wednesday. I think it's a given that they are going to lower by a quarter of a percent. I don't think that this will do much to help the jobs market and the economy, but I do think that it'll help grow inflation. And ultimately, I think that's what they're going to confirm at this next meeting is that they are continuing to throw inflation under the bus while lowering interest rates as the inflation is growing. Most of the time, when the inflation is growing, the Federal Reserve is looking at raising interest rates. Now they're cutting interest rates into growing inflation after they've already failed in their effort to bring it down to their target rate. And so that's coming out on a Wednesday. I will also be interested in hearing more about what they think is happening with the growth and the inflation. It will be interesting to see what they have to say about that. But the big thing is that they are throwing the inflation under the bus. They won't say it like that. They certainly won't talk about when they talk about their polling of their members and ask them about where they see the economic growth and the inflation, I believe that you'll hear them talking about slower economic growth and inflation higher than the significantly higher than the target rate. And what they won't say is that that means stagflation. But rest assured, that's what they're creating an environment of. And they should be really careful about that because they have no tools to fight stagflation. If stagflation gets out of control and they have to increase interest rates because the inflation is getting out of control, then they're going to cause more economic and job weakness. If they lower interest rates to support the jobs market and the economy, then they throw inflation under the bus. And so once stagflation gets to a problematic level, or at least recognized as a problematic level. I think it's already at a problematic level, but I don't run the economy or the Federal Reserve. But I think that once it gets out of what they consider alarming or a concern, that it'll be too late by then. That that they will just have no tools to fight it, and then it will run on its own. And so that is a big meeting on Wednesday. And then on October the 29th is when Agnico Eagle, my number one pick for gold miners, they report their quarterly report, and they've made a series of records in free cash flow quarter after quarter over the last year and a half or so. And I think they're going to have their best one ever because this quarter that just passed was the best quarter ever for the average price of gold. And the fourth quarter of 2025 is going to be by far the best quarter ever. So I think they got a great quarterly report to come out on midweek, and then even better coming out in the last quarter of 2025. Alamos Gold is also on the same day doing their quarterly report. They're my number one long-term pick for mid-tier gold producers. And they've been performing a lot like Agnico Eagle. They've been making quarter after quarter records in free cash flow, and they're pumping all that money back into the business. They're building new mines that will increase their production, almost double their current production over the next year, year and a half, and also bringing their cost of production down. They're already a lower cost producer than the average of the gold miners, but this will bring them a few $100s below the average cost. And so they're taking their free cash flow, they're pumping it back into the business to create even more free cash flow. So I'm really excited about those two reports. Now, a few days ago, Newmont announced their quarterly report. I'm just going to bring it up here and we'll get some of the key information from it. Newmont reports third quarter 2025 results and improves 2025 cost and capital guidance. The big thing here is the third quarter saw them have a record of $1.6 billion in free cash flow. Now, when you see that much free cash flow, you would think that their stock would blast off based on that. Now, keep in mind that we've had some volatility in the price of the metals, the gold, and so that had some effect. But they've come off pretty significantly from this, let's say, right around $100 level, and they came all the way down to $83. And they had a bit of a rally on the announcement of the results, and then they came off quite a bit, about $6 or $7 per share. And I think if you look further into this news release, you'll start to get an idea of why. So the production was down quarter over quarter slightly, and it was down year over year. Now, when investors, they don't look below the surface, they only look at the surface. And at the surface, they say, well, our production is down year over year. Well, why is it down? Well, they sold off a lot of their non-core assets so that they could focus on optimizing their tier one mines. They sold all the non-core assets to focus on optimizing their tier one mines. And of course, if you get rid of your non-core assets, that's going to affect your production. Now, I think that in the long term, it's a smart move because they are going to bring their costs down and make a lot of free cash flow in a rising price environment for gold. But the other problem is that, well, investors, they want to see miners that are increasing their production, not decreasing their production. Even though they're making records in free cash flow, they had they had less production. Okay. And they also had some somewhat, I don't want to say alarming, but sort of weird comments about how the if the price of gold keeps on rising, that they will see higher costs of royalties and other issues like this. I'll see if I can find it quickly in this. It's down here. Compared to the previous quarter. Okay, so no, that's not it. 2000. Here it is. Okay. Oh, here it is. Building on the cost and productivity improvements in 2025, that's good. The company expects to realize the full benefits of its cost-saving initiatives. Okay, so they're trying to bring their costs down. Now, some bringing some costs down are good and some are not so good. If they bring their G&A down, that's a good thing. But if they also don't increase their exploration, they're going to continue to have issues with increasing their production and replacing their old deposits with their new deposits. They go on, which will be reflected in the 2026 guidance to be provided next year. However, these benefits could be offset by increased profit sharing, royalties, and production taxes if the gold prices remain elevated into 2026. So yeah, those things all go up, but if the price of gold goes up at a higher rate, that doesn't seem to be problematic. But I think that statements like that, and then the trend of their production, kind of spooked people a little bit, especially on Friday when it came off it was down 6.23% on Friday or $5.54 to $83.37. And it wasn't a coincidence, me being the troublemaker that I am, but it wasn't a coincidence that over the last day or so, there's been some reports out from unnamed sources that Newmont is looking at taking over or making an offer for Barrick's Nevada gold mines. And whether that happens or not, I think what it is sending a signal is that management in Newmont saw how their quarterly report was, the effect of their quarterly report, and wanted people to know that they're looking, I think the consensus on the street was that Newmont needs to do something about its production profile, increasing production. And that's the growth side of the equation. And, so quarterly report doesn't get that good of love in the market. And on the same day that happens, it comes out through anonymous sources that they are looking at the possibility of buying out or making an offer at least for Barrick's Nevada gold mines. And again, I don't know whether that is true. I don't know whether it will happen. I see some reasons why it could happen. One of the reasons is Newmont obviously wants to increase its production because it knows it needs to focus on growth. Um, Barrick is building a bunch of mines. A lot of focus is on their copper, and they're going to need billions to do that. And so, if they were to sell some of their gold assets, well, they would get a stockpile of cash to build out their copper operations. Um, Now, bear in mind that some of the what's the best performing parts of Barrick, it's their Nevada gold operation. So whether they would be interested in selling all or part of it, who knows? Newmont and Barrick have had these conversations before. But the bigger point to me is that Newmont recognizes that it needs to work on its growth. So let's say that they can't get any of Barrick's mines in Nevada. So where else do they look? Well, if you look at the mid tiers, most of those are not big enough to move the needle for Newmont. All right. Same thing can be said for the junior gold miners. Maybe if a bunch of junior gold miners got together and some of the mid tiers, maybe then they could move the needle for Newmont. But I don't think that that is much of a short term fix to their problem. I think ultimately what Newmont has to do, as do other major gold miners, is they need to start looking after the foundation. Okay, the foundation really is the explorers. Although the explorers get dismissed by a lot of the snooty investors out there that think that exploration is not that important, it is crucially important. That's the foundation of future production. It's the foundation of projects that then get developed into mines that build junior gold miners into mid tiers, that help build mid tiers into bigger mid tiers, and help majors to be able to replace their old mines with new mines. So exploration takes on a very important part, even though they're the lowest valued on the food chain. I would argue that they punch above their weight when it comes to importance. So ultimately, what I think is going to happen is the Newmonts of the world, the majors of the world, they're going to have to the small end, the explorers have gone through a tough period over the last 3 or 4 years. It's been a better year over this past year, but it certainly hasn't revived and built up the exploration industry like it needs to be in gold and silver. And so I think what's going to happen is you're going to start to see these majors making strategic investments into the explorers that have important discoveries or look like they can make important discoveries. It also wouldn't surprise me to see them want to get involved with developers with high quality projects. And so when I look at the explorers, I try to look at the explorers that have important discoveries that are not being appreciated as much as they should be, or those that can make important discoveries. And then when it comes to the developers, I like to look for the ones with high quality projects that they can either bring into production or they could bring in a joint venture or be sold completely to a larger company. Then with the junior gold miners, I'm looking for the companies that can take advantage of the price of gold. You know, if you maybe for a major, if you produce 50,000 ounces to 100,000 ounces a year, that's like a rounding error to a major mining company. But for a junior gold miner, if they're producing gold at, let's say, $1,500 and they're making let's say 2,500 or $3,000 per ounce that they produce, well, 100,000 ounces of that kind of free cash flow adds up, especially when many of these juniors are trading well below what that free cash flow would look like for a year or two outwards. And so I like to look for those new junior gold miners, those ones that are growing their junior gold mining, and I try to think like, what would I be doing if I was running a major mining company? What would I be looking at in these different categories of companies? And so that's the kind of companies I try to focus on. Now, um, the big point I wanted to make though was that I think it's incumbent on these larger companies to start supporting the explorers with either important discoveries or the chance to make important discoveries, with developers that are developing high quality projects, to junior miners. They could all use support, because if your weakest link of a chain, or your weakest links are weak, the whole chain is somewhat broken. And that's what we're seeing which is the other reason that I'm really bullish on gold and silver. I talked about some of the big picture things, but another big picture issue is that the supply chain of gold and silver and copper and other metals that the world needs are broken. The exploration has not been funded well enough to result in a lot of important discoveries being made. That means that there's not as many as needed in the development stages. There's not as many junior gold miners that have high growth prospects, or mid tiers with high growth prospects. And this all has broken the supply chain. You know, I often hear people talk about, these economic 101 type statements that, well, if the price of something goes up, the production will as well. Why isn't that happening with gold, silver, and copper? All of them are near their record highs, and yet the production is flat to declining. Why is that? Well, it's because there hasn't been enough money put into the R&D side of the business, the research and development side of the mining business, and this has left the overall supply chain broken. And it's going to stay that way for a very long time, folks. So when you consider all those issues that I brought up at the beginning of the show, and then what's happening along the food chain of the stocks in the business. And then you look at what's happening with the supply chains of gold, silver, copper, and other metals that are broken. This is a perfect storm for the price of precious metals that just keeps getting more perfect. Okay? And so when I see this kind of volatility after a big run, this doesn't concern me one iota. In fact, I learn a lot from pullbacks in a bull market. And one of the things I look for is the higher lows, okay, and higher highs. So we've had a series of higher lows, and even though it's come back, it still hasn't got below this last uh, low, if you will, and it's still staying above $4,000 an ounce. Closed the spot, or the futures closed at 41.26 on Friday, and so even if you look at the rising bottoms, the lower higher lows, here's an important higher low, and after a significant pullback, we're seeing the makings of the next higher low. and then you see a series of higher highs. Well, I think the next higher high takes it into new record territory above 4,400. And I think we're going to see that happen between here and the end of the year. And, who knows? We might even see 5,000 before the end of the year. Um, but it's the trend that I'm looking at. And the trend is that whether you look at the trend in prices or the trend in what's moving the prices, everything is a perfect storm for gold, silver, copper, and other metals. And so that's my story for today. What I'm going to do is I'm going to put in the description of this video, I'm going to put my list of my picks. So I have them broken down into major precious metal miners. I only have three of those. They are Agnico Eagle, which is my number one gold miner, Newmont, because I think that they're in a good cycle for their performance. Pan American Silver is my number one silver producer because I think that they are, as the price of silver goes into record highs, that Pan American Silver is going to significantly outperform the bullish movement in the price of silver. And that's the way, if you're somebody who wants exposure to the performance of gold with added torque, the major and limited downside risk, the major miners in gold are a good way to look at that. Same thing with silver. And that's why I picked those three companies. Now, I also have four mid-tier gold miners, Alamos Gold, Aris Mining, Equinox Gold, and Orla Mining. I have a series of junior gold miners called Borealis Mining, Heliostar Metals, Luca Mining, McEwen Inc., Sierra Madre Gold and Silver. So in those categories, I only have like a few or a handful at the most in each of those categories. Now, when it comes down to the developers and the explorers, I have a lot more of those because I think that they are the most undervalued along the food chain. And I don't think they're getting the kind of support in the market that they deserve. All right. Or they're not getting enough love in the market. And so I have in my developers, I have Amex Exploration, Arizona Metals, BlackRock Silver, Emperor Metals, Foran Mining, Generation Mining, McEwen Inc., because they are a developer of a world-class copper project, Meridian Mining, Newfound Gold, Nouveau Minerals, and Vizsla Silver. Now, that is probably about 12 companies, but they're spread out over different metals. Like I've got one, two, three, four of those are in gold, one, two of those are in silver, and about four of those are in base metals. So I try to give my audience a mix there because I like base metals and I like precious metals. So I try to pick a good group in each of those for the developers. I have a special category that I call my gold explorers with important high grade discoveries. There's only two of those. Those are Goliath Resources and Southern Cross Gold. These are exceptional discoveries that they have, and I believe that they have a lot of blue sky ahead of them, and that's why I have a separate group for them. Now, of the explorers, I think I have 18, and those are mixed up between, let's say, six or seven of those are in gold, four of those are in silver. Six or seven of those are in base metals. And so those companies are Almadex, Argenta Silver, Canadian Gold Corp, Dryden Gold, Golden Cross Resources, Hercules Metals, IDEX Metals, Inventus Mining, Kirkland Lake Discoveries, Kootenai Silver, Mithril Silver and Gold, Norsemont Mining, Pacifica Silver, Power Metallic Mines, Kimbaya Gold, Sterling Metals, Sokoman Minerals, and Wolfton Resources. So as you can see, there's a lot more explorers, but and more developers than I have in the junior gold miners, the mid-tier gold miners, and the major precious metal miners. And that is because I think that there is a lot of opportunity that's not being recognized in these developers and explorers. And that's why I can find more of them. All right. Now, I'm also going to be starting a new category, which I talked about on my last show, last weekend show, which I call my unicorns. Okay, so my unicorns are companies that have projects that are so unique that I think that they can make them into exceptionally larger companies, real company builder type added assets. And so where I get that unicorn name from is when companies have big success in the tech sector, they're called unicorns. And so in my unicorn category, I have Vizsla Silver, McEwen Mining, Goliath Resources, and Amex Exploration. Now, I talked at length about them last weekend, so I'd advise you to listen into that show so you can get some more details on my unicorn picks. And then I have another category that I call my top of mind. And there's four of those. Those include Sokoman Minerals, Sterling Metals, Kirkland Lake Discoveries, and Borealis Mining. So the reason that these companies are on my top of the mind list is because they are doing things that are keeping my attention really close to what they're doing. They've got really good things happening on with their projects and their companies, and they have the potential to make a lot of news. And so I think that they are well positioned for growth. And as I do with all of my companies, but sometimes for whatever reason, some companies boil up to the top of my mind more than others. Now, some of that's because other companies that are in the explorers or developers, they might be doing things that news might be a little further down the road, and so that they could then become top of mind companies again. So I don't really think that these are the only ones you should look at because I think there's merits to all the companies that I cover. It's just that these particular companies have a lot of developments happening right now. Okay. Some of my picks are because I think that they're tremendous value propositions. And and then to see those value propositions unlocked, they have to have catalysts. Okay. So if a company is waiting on catalysts, well, as soon as those catalysts, they can become top of mind stocks very quickly. So, you know, it's a trying to time all this is not easy, but I provide you with my entire list because I know that I have in my audience investors that invest in the majors. Some invest in the mid tiers, some in the juniors, some like the developers, and some like exploration exposure, or some like a mix of all of those. And so I try to find high quality and say, for example, some in my audience might only be interested in gold. And so they may want a major gold miner, a mid tier, maybe one or two junior gold miners, maybe a few developers, and maybe a few explorers as well. So, what I'm going to do in my list is I've got them broken down by category, And I'm going to put in parentheses what their metal is, the primary metal that they're involved in. Okay. So there you go. That's my show for this weekend. As always, I'm only an idea generator. I'm not making buying or selling recommendations. I try to present a group of companies that have passed my tests, that I build those tests based on 32 years of experience in the mining business and having had mentors in geology, geophysics, geochemistry. And so I try to be a filter to help you as an investor in this sector uh, find good ones for you to do your homework on. But that's the important point. You got to speak with your financial advisor about your risk profile, and you also have to do your homework. And I always end my shows talking about homework. And the reason is that that could be the best advice I give, which is to do your homework. It doesn't really matter what sector you're involved in, but I've noticed over my career that those in the mining business that are the most well informed about the metals they're involved with and the companies they invest in tend to make more logical decisions based on reasoning and facts, and not so and less of those emotional decisions that are made based on short-term fluctuations in the price of a stock. And so, but this is the case for every sector. I've watched all sectors. I've been really into tech for, since even before I got into mining. And it doesn't, and I've seen the same thing. Those that are well informed and look to the future, and you can't invest in yesterday. You can only invest in today and tomorrow. But it's those well-informed investors that think rationally and based on facts and logic that are the most successful. So ultimately, if I can do anything with my shows, I hope that I make help my audience become more successful in their investing. And I think a key to that is doing your homework. All right, got all that out of the way. You have a nice day, evening, afternoon, wherever you are in the world where watching this, and I'll talk to you soon.